Deep inside Beijing's financial district sits a weapon most Americans never hear about. No bombs, no missiles, just money. A lot of it. Over $3 trillion in foreign currency. It's the biggest pile ever held by one country in all of history. As of late 2025, China controls more than $3.3 trillion. That's bigger than the entire UK economy. Let that sink in. This didn't happen by accident. This wasn't bad luck for America. It was planned. Slow, patient, relentless. China didn't steal this money. We gave it to them. One purchase at a time. Every dollar came from American shoppers. Walmart, Target, Amazon boxes on porches. Paid for it with dollars printed in Washington. Shipped across the Pacific. Stacked on shelves. Swiped at checkout. Economists said trade deficits didn't matter. They were wrong. You can see the damage. Closed factories. Empty towns. The Rust Belt left to rot. Here's the real lesson history keeps teaching. Great powers don't just make stuff, they make leverage. And nothing creates leverage like currency. Back in the 1700s, Britain figured this out by accident. They tied their money to gold. The pound became trusted, stable, global. If you controlled the money, you controlled the game. America copied that playbook in 1944. Bretton Woods, the dollar at the center, gold backing it. The world had to use dollars. America got a cheat code, but here's the catch. Currency power only works until too many people hold your money. In 1971, Nixon shut the gold window. The system broke. Too many dollars. Not enough gold. China watched all of this closely. Then China built something smarter. Before China, Japan tried the same export play. Cars, electronics, machines everywhere. The US got mad. In 1985, the Plaza Accord happened. Japan was forced to raise the yen. Exports collapsed, bubbles formed, then popped. Japan never recovered. China learned the lesson. Never play by Western rules, and never let outsiders control your currency. I never trust the system to stay fair. So China moved in stages. Stage 1, 2001. WTO entry. China locked its currency low. Exports got cheap. Really cheap. Dollars flooded in. China printed yuan to stop appreciation, then bought US treasuries. Americans bought Chinese goods. China loaned the money back to Washington. Perfect loop. By 2013, China held $1.3 trillion in US debt. Top creditor. Peak leverage. At that moment, the game flipped. The US thought China was trapped. Too many dollars. Too dependent. But China had already moved on. American manufacturing was collapsing. Factories shut down. Machines went silent. Millions of jobs disappeared. Not overnight. Slowly, quietly. Entire towns hollowed out. Skills lost. Supply chains gone for good. And while Washington argued politics, Beijing planned the exit. Stage 2 around 2014. This is where the strategy got smarter. China didn't panic. Didn't dump treasuries. Didn't crash markets. That would have been sloppy. Instead, China sold slowly, methodically, almost invisibly. Quarter by quarter, year by year. No press conferences, no alarms, just quiet selling. The goal wasn't escape. It was repositioning. China understood something critical. Treasuries are safe, but they're also a leash. So China loosened the leash. By 2016, holdings were falling. By 2020, the trend was locked in. By 2024, exposure was cut nearly in half. And here's the key part. The money didn't disappear. It moved. Where did the money go? Not into US assets, not into Wall Street, into control points. Ports, highways, rail hubs, energy grids, fiber cables, logistics choke points. This wasn't investing, this was mapping the world. Enter Belt and Road. China didn't call it an empire, but that's what it was. Over 150 countries signed on. Asia, Africa, Europe, Latin America. China financed the projects. China built them. China maintained them. Local governments took the loans. China kept the leverage. Ports in Sri Lanka, railways in Africa, roads through Pakistan. Every project looked harmless. Till you zoomed out. Together, they formed a network. A parallel system. One that didn't need us approval. Debt isn't the weapon, dependency is. Countries. That's the lie people still believe. Dependency is the weapon, debt is just the paperwork. When countries couldn't pay, China didn't send tanks, didn't send troops, didn't make threats. China renegotiated. Quiet meetings, closed doors, new terms, longer repayment windows, lower short-term pressure, but higher long-term cost. Equity stakes replaced cash, ports, airports, power grids. Ownership without headlines. Political concessions followed. Voting alignment. Silence on Taiwan. Support at the UN. No invasion. No occupation. It's just influence. And the craziest part? The US couldn't stop it. It's because none of it violated the rules. Free markets. Private lending. Voluntary agreements. All funded by US trade deficits. That's the irony. American consumers financed the erosion of American power. Gold mode activated. At the same time, China flipped another switch. Gold. Not meme gold. Not paper gold. Not Wall Street gold. Physical gold, bars, vaults locked away. Month after month, China bought gold. No press releases, no hype cycles, no CNBC countdowns, just accumulation. While the world chased tech stocks, China chased permanence. While traders bought volatility, China bought certainty. Why gold? Because gold has no counterparty risk. No bank needed. No clearinghouse. No promise required. Gold doesn't default. Gold doesn't get sanctioned. Gold doesn't need permission. You can't freeze it. You can't cancel it. You can't print more of it. Paper burns. Metal survives. China remembered history. Every reserve currency dies the same way. Too much issuance. It's too much confidence. Too much abuse. Britain with the pound. America with the dollar. Overuse, overprinting, overconfidence. Gold is the exit ramp. Not today, not tomorrow, but eventually. Stage 3 right now. This is the part cable news avoids. No explosions, no drama, no easy graphics, just infrastructure. And infrastructure always beats headlines. China didn't just move money, it rebuilt the pipes. Money pipes. In 2015, China launched CIPs, Cross-Border Interbank Payment System. Most people shrugged. Big mistake, because power isn't loud when it's smart. CIPS isn't flashy. It's boring. And boring systems run the world. CIPS lets countries settle trade in yuan. No dollars, no SWIFT, no Western approval. No phone calls from Washington. That matters more than missiles. Because SWIFT is America's real weapon. Cut off SWIFT, and a country stops breathing financially. No trade, no settlements, no insurance, economic suffocation. China studied that playbook, then built the bypass. Who joined first? The desperate, sanctioned countries. Russia, Iran, others under pressure. They had no choice. But then something interesting happened. Neutral countries started watching. Quietly, they didn't hate the dollar. They just didn't trust it anymore. They saw sanctions expand, rules change, assets frozen overnight, confidence cracked. So they diversified, just in case. Nobody wants to be trapped. The dollar problem, here's the uncomfortable truth. The dollar still dominates. Oil, trade, reserves. But dominance isn't permanence. Every trade settled without dollars is a brick removed from the wall. One brick doesn't matter. 1,000 does. 10,000 does. Collapse doesn't come from one event. It comes from erosion. China understands erosion. That's why it's slow, why it's patient. No sudden collapse, no global panic, just gradual decay. Confidence fades before systems fall. 2025 changed the math, then came 2025. China's trade surplus hit $1 trillion. That's not normal. That's historic. Exports surged. Factories ran hot. Ships left ports non-stop. Imports lagged. China sold more than it bought. And here's the twist. Those dollars didn't go back into U.S. debt. No recycling, no safety loop. It went elsewhere. Gold, infrastructure, influence, Africa, Asia, Middle East, America printed, China converted. That's the difference. Now comes the trap. This is where both sides freeze. China still holds hundreds of billions in treasuries. Enough to shake markets. Enough to scare Wall Street. But not enough to be cornered. If China sells too fast, U.S. interest rates spike. Mortgage rates jump. Credit tightens. Debt servicing explodes. Washington panics. But China won't do that, because China doesn't need to. Time does the work. Inflation does the work. Debt does the work. Politics does the work. The trap tightens on its own. Mutual assured financial damage. If the U.S. retaliates hard, it hurts itself first. Sanctions backfire. Trade reroutes. Allies hesitate. Nobody wants to choose sides. Confidence cracks. Markets hate uncertainty, so nobody moves. That's the trap. A system so fragile that action is riskier than inaction. History is screaming this has happened before. Britain lost the pound when colonies stopped trusting it. Too much debt, too many promises. America broke Bretton Woods when gold ran out. Same pattern. It's a different century. Now the dollar is stretched. Too much debt, too many dollars overseas. And now alternatives? That's new. That's dangerous. This was never about money. This was about control without war. China didn't need aircraft carriers. It needed patience. It didn't conquer countries. It financed them. It didn't overthrow systems. It built parallel ones. Slowly, quietly. Legally. That's the scary part. It worked. It's the final reality. China didn't stockpile cash. It stockpiled options. Insurance against sanctions. Insurance against dollar collapse. Insurance against U.S. pressure. Flexibility beats strength. K. Optionality beats force. The dollar still rules for now. But power isn't who's loudest, it's who can wait. And China is very good at waiting. The last question, the real question, isn't if the system changes. It's what happens. When the world finally admits it already has,